Question 1. In a long-term disability insurance policy, the definition of total disability typically refers to a. The inability to perform the duties of any occupation, regardless of prior experience or training. B. The inability to perform the essential duties of the insured's own occupation, even with reasonable accommodations. C. The inability to perform the duties of any occupation for more than 12 months. D. Complete and permanent loss of income due to an accident or illness. Answer: B. The inability to perform the essential duties of the insured's own occupation, even with reasonable accommodations. Explanation: the correct answer is B. The definition of total disability varies between policies, but generally refers to the insured's inability to perform the essential duties of their own occupation under the own occupation standard. This typically applies during the initial period of disability and does not require the individual to be unable to perform all jobs, just the ones they are trained or suited for. The other options are incorrect because is too broad and refers to the any occupation definition, which is less common in long-term disability. C refers to duration and does not accurately describe the definition of disability in the context of long-term policies. D incorrectly suggests that total disability is directly linked to the loss of income, but this is a separate issue often addressed through benefits, not the actual definition of disability. Question 2. An insured individual applies for disability benefits under their private disability policy. The insurance company delays the claim for over 90 days without providing a valid reason. According to South Dakota law, which of the following actions can the insured take? A. File a complaint with the South Dakota Department of Insurance if the claim is unreasonably delayed beyond 30 days. B. Immediately file a lawsuit against the insurance company for breach of contract. C. Wait for up to 180 days before taking any action as the claim delay is normal in South Dakota. D. Appeal the claim with the insurance company directly after 60 days of delay. Answer: A. File a complaint with the South Dakota Department of Insurance if the claim is unreasonably delayed beyond 30 days. Explanation: according to South Dakota law, insurance companies are required to act promptly on disability insurance claims if there is an unreasonable delay in processing a claim such as the one described here. 90 days. The insured has the right to file a complaint with the South Dakota Department of Insurance after a reasonable period has passed, typically 30 days. B is incorrect because a lawsuit is usually not the first step in the claims process and can be premature without first allowing the insurer to respond to the claim. C is incorrect because there is no provision under South Dakota law allowing a 180-day delay without consequence. D is incorrect because the insured does not have to wait 60 days for an internal appeal before contacting the state insurance department if there is an unreasonable delay. Question 3. Scenario-based question. Mr. Daniels, a self-employed individual, has been paying premiums for a long-term disability insurance policy that he purchased 5 years ago. He is now experiencing significant medical issues that prevent him from continuing his business activities. Mr. Daniels files a claim, but the insurance company informs him that his policy does not cover self-inflicted injuries and the medical condition he is facing is considered to be self-inflicted. Mr. Daniels believes this is an incorrect interpretation of his policy. What should Mr. Daniels do in this situation? Accept the insurance company's decision as final and discontinue his claim. B. File a formal complaint with the insurance company, request a review of their decision and provide supporting medical evidence. C. File a lawsuit against the insurance company immediately for wrongful denial of the claim. D. Wait for the insurance company to review the claim on their own as it is unlikely to be overturned without a legal process. Answer: B. File a formal complaint with the insurance company, request a review of their decision and provide supporting medical evidence. Explanation: the correct course of action in this scenario is B. If the insurance company denies the claim based on an interpretation of the policy such as self-inflicted injuries, Mr. Daniels should first file a formal complaint and request a detailed review of the decision. This will allow him to present additional supporting medical evidence or documentation that could overturn the denial. It is incorrect because it is not advisable to accept the denial without exploring all options for resolution, especially if the denial could be based on a misunderstanding or misinterpretation. C is premature as lawsuits should generally be considered only after all internal avenues of appeal and complaint have been exhausted. D is incorrect because waiting without actively pursuing the appeal or complaint will delay any potential resolution and may hinder the chances of overturning the decision. Question 4. In South Dakota, if a disability insurance policy has a residual disability rider, which of the following is a likely benefit? A. A reduced benefit for the insured if they are unable to perform any occupation. B. A partial benefit if the insured is able to perform some duties of their occupation but at a reduced capacity. C. Full benefits if the insured is temporarily unable to perform any duties even for a short period. D. A lump sum payout for short-term disabilities only. Answer: B. A partial benefit if the insured is able to perform some duties of their occupation but at a reduced capacity. Explanation: a residual disability rider is designed to provide partial benefits to an insured who is still able to work in their occupation but has experienced a reduction in income due to their disability. This rider is commonly added to policies to help cover the financial gap when an insured is not fully disabled but is still significantly impaired. It is incorrect because a residual disability rider does not pay benefits based on total inability to work but rather partial loss of income. C is incorrect because residual disability does not pay full benefits for temporary disabilities, it focuses on partial disability. D is incorrect because this type of rider is not intended for short-term disabilities, but for partial disabilities that impact the insured's ability to earn an income. Question 5. What is the most common elimination period in a long-term disability insurance policy? A. 7 days, B. 30 days, C. 60 days, D. 90 days. Answer: C. 60 days. Explanation: the elimination period refers to the waiting period between the onset of a disability and the beginning of benefits payments. While the specific duration can vary between policies, 60 days is one of the most common elimination periods in long-term disability insurance. This period is typically long enough to ensure that short-term injuries are excluded from coverage while still being reasonable for the insured to manage. It is incorrect because 7 days is typical for short-term disability policies, but not for long-term disability. B is incorrect because 30 days is not a typical elimination period for long-term policies as it's more common for short-term disability. D is incorrect because while 90 days is possible, it is less common than 60 days for long-term disability policies. Question 6. Scenario-based question. Mr. Thompson is a 45-year-old office manager who has been covered by his employer's disability insurance plan for the last 10 years. Recently, he suffered a back injury that left him unable to perform his regular job duties. After filing for benefits, the insurance company informs him that they will be providing only partial benefits because he is able to perform a different type of work within the organization. According to Mr. Thompson's disability policy, which provision is most likely to affect his benefits? A. The policy's own occupation definition of disability. B. The policy's any occupation definition of disability. C. The policy's exclusion for pre-existing conditions. D. The policy's residual disability rider. Answer: B. The policy's any occupation definition of disability. Explanation: in this scenario, the key to understanding Mr. Thompson's benefits is the any occupation definition of disability. Policies with an any occupation definition of disability typically provide benefits if the insured is unable to perform any occupation for which they are reasonably suited by training, experience, and education. This is why Mr. Thompson is being given partial benefits, because he is still capable of performing other work within the company, even though it is different from his usual office management duties. Is incorrect because the own occupation definition provides benefits if the insured cannot perform the duties of their own occupation, not any occupation. C is incorrect because there is no mention of pre-existing condition in this scenario. D is incorrect because the residual disability rider addresses partial loss of income but would not typically impact the ability to perform any occupation. Question 7. Which of the following medical conditions is most likely to be excluded from disability insurance coverage under the pre-existing condition clause in a policy? A. A heart attack occurring after the insured had a recent history of high blood pressure and was treated for it. B. A leg fracture sustained from a car accident that occurred after the policy was issued. C. A back injury from lifting heavy objects at work that is directly related to a prior work accident. D. A new diagnosis of diabetes that has not previously been diagnosed or treated by a doctor. Answer A. A heart attack occurring after the insured had a recent history of high blood pressure and was treated for it. Explanation: the pre-existing condition clause in disability insurance policies typically excludes coverage for conditions that existed before the policy was issued or within a defined period after the policy's issue date. In this case, the heart attack is most likely to be excluded because it occurred after the insured had history of high blood pressure, condition which was treated before the policy was in effect. Pre-existing conditions are common exclusion in disability insurance, and any condition that can be reasonably linked to prior treatment or diagnosis is often excluded from coverage. B is incorrect because leg fracture from car accident is new event and would likely be covered under the policy unless specific exclusion for accidents is included. C is incorrect because the back injury occurred after work accident, so it is not necessarily pre-existing condition as long as it is tied to the accident. D is incorrect because diabetes was not previously diagnosed or treated, so it would not be considered pre-existing condition. Question 8. Which of the following is a taxable disability benefit under federal law? A. Benefits paid under an individual disability insurance policy that the insured paid for entirely with after-tax dollars. B. Benefits paid under an employer-sponsored disability plan where the employer paid the premiums. C. Benefits paid under a long-term disability policy that the insured purchased with pre-tax dollars. D. Benefits paid under an individual disability insurance policy where the insured paid the premiums with pre-tax dollars. Answer: B. Benefits paid under an employer-sponsored disability plan where the employer paid the premiums. Explanation: under federal law, disability benefits paid under an employer-sponsored plan are taxable if the employer paid the premiums. This is because the employer's contribution to the premiums is not included in the employee's taxable income. Thus, when the employee receives benefits, those benefits are considered taxable. Is incorrect because if the insured paid for the policy entirely with after-tax dollars, the benefits are typically not taxable. C is incorrect because benefits paid under policy where the insured used pre-tax dollars are generally taxable, but this scenario refers to the individual purchasing the policy. D is incorrect because if the insured used pre-tax dollars to pay for the policy, the benefits are typically taxable. Question 9. Which of the following statements regarding disability insurance policies is true? A. Disability insurance policies generally pay benefits for an indefinite period as long as the insured remains disabled. B. Disability insurance policies typically require the insured to provide medical evidence of disability only at the time of application. C. Disability insurance policies may provide coverage for conditions that are temporary but require a long elimination period before benefits are paid. D. Disability insurance policies are always renewable for life, even if the insured develops a new condition. Answer: C. Disability insurance policies may provide coverage for conditions that are temporary but require a long elimination period before benefits are paid. Explanation: disability insurance policies often include a long elimination period that must be satisfied before benefits begin. This period helps to differentiate between temporary conditions that resolve quickly and conditions that lead to a prolonged inability to work. Policies may provide coverage for both temporary and permanent disabilities, but only after the elimination period has passed. It is incorrect because most policies have a defined benefit period, e.g., 2 years, 5 years, or until retirement age, rather than indefinite coverage. B is incorrect because insurers may require ongoing medical evidence to verify continued eligibility for benefits during the claim period. D is incorrect because not all disability insurance policies are renewable for life, and many policies have age limits or conditions under which renewal is not guaranteed. Question 10. A South Dakota resident applies for long-term disability benefits under a policy that includes a future increase option. What does this option allow the policyholder to do? A. Increase the benefit amount during the policy term based on inflation rates. B. Increase the benefit amount at any time without proving additional disability. C. Increase the benefit amount in the event of job promotion or increase in salary. D. Decrease the benefit amount to lower the premium rate. Answer A. Increase the benefit amount during the policy term based on inflation rates. Explanation: the future increase option, FIO, allows policyholders to increase their disability benefits during the policy term to keep pace with inflation or rising costs, typically without undergoing additional medical underwriting. This option ensures that the insured's coverage remains adequate over time as the cost of living increases. B is incorrect because the future increase option does not allow the insured to increase the benefit without proving the need based on circumstances such as inflation. C is incorrect because the future increase option is typically linked to inflation rather than specific employment events like job promotion. D is incorrect because the future increase option does not allow the insured to decrease benefits to reduce premium payments. Question 11. Which of the following is an example of a waiting period in a disability insurance policy? A. The time between when a disability occurs and when benefits are first paid. B. The amount of time the insured must work for the employer before becoming eligible for coverage. C. The maximum duration that benefits will be paid under the policy. D. The amount of time the insured must wait before filing a claim for disability benefits. Answer A. The time between when a disability occurs and when benefits are first paid. Explanation: the waiting period, also known as the elimination period, is the time between when the insured suffers a disability and when the insurance company begins to pay benefits. This period is set in the policy and varies, typically ranging from 30 to 90 days. B is incorrect because the waiting period refers to the time before benefits are paid, not the eligibility for coverage. C is incorrect because the maximum duration benefits are paid is the benefit period, not the waiting period. D is incorrect because the waiting period is about the time before benefits are paid, not about filing a claim. Question 12. Which of the following would most likely be covered by a short-term disability insurance policy? A. A permanent back injury that prevents the insured from working for more than a year. B. A temporary illness that causes the insured to be unable to work for 6 weeks. C. A broken leg that requires surgery and prevents the insured from working for 6 months. D. A long-term illness that prevents the insured from working for 5 years. Answer: B. A temporary illness that causes the insured to be unable to work for 6 weeks. Explanation: short-term disability insurance is designed to cover temporary conditions that prevent the insured from working for a limited period, typically ranging from a few weeks to a few months. A temporary illness that causes the insured to be out of work for a relatively short time, like 6 weeks, is typical of what short-term disability policies cover. A. C and D are incorrect because these are more likely to fall under long-term disability insurance rather than short-term coverage. Question 13. Which of the following is most likely to be excluded from disability insurance coverage? A. A new medical condition that arises after the policy is issued and is covered under the terms of the policy. B. A condition that results from an accident and is not related to any pre-existing medical condition. C. A disability caused by alcohol or drug abuse when the insured has a history of such behavior. D. A temporary disability caused by a short-term illness such as the flu. Answer: C. A disability caused by alcohol or drug abuse when the insured has a history of such behavior. Explanation: disability policies often have exclusions for disabilities related to alcohol or drug abuse, especially if the insured has a history of substance abuse. Many policies include an exclusion for conditions that arise due to these factors. Is incorrect because a new medical condition that arises after the policy is issued and is not related to pre-existing conditions is typically covered. B is incorrect because an injury from an accident that is unrelated to pre-existing conditions is generally covered. D is incorrect because temporary illnesses like the flu are typically covered under short-term disability policies. Question 14. Which of the following is a feature of a guaranteed renewable disability insurance policy? A. The insurer can cancel the policy at any time. B. The insurer can increase premiums without the insured's consent. C. The policy cannot be cancelled by the insurer as long as the premiums are paid. D. The insured can decrease the policy's benefits during the policy term. Answer: C. The policy cannot be cancelled by the insurer as long as the premiums are paid. Explanation: a guaranteed renewable policy ensures that the insurer cannot cancel the policy or refuse to renew it as long as the insured continues to pay the premiums. The insurer can increase the premium, but only on a class basis, not for individual policyholders. O is incorrect because guaranteed renewable policies cannot be cancelled by the insurer unless the insured fails to pay premiums. B is incorrect because premiums can only be increased for a group of policyholders, not for individuals. D is incorrect because decreasing the benefits would be against the terms of the guaranteed renewal, which focuses on ensuring continuity of coverage. Question 15. Which of the following benefits is typically not covered by a disability insurance policy? A. Short-term injuries that temporarily prevent the insured from working. B. Conditions caused by self-inflicted injuries or suicide attempts. C. Disability resulting from a car accident. D. Disability caused by a sudden illness such as pneumonia. Answer: B. Conditions caused by self-inflicted injuries or suicide attempts. Explanation: disability insurance policies generally exclude coverage for injuries that are self-inflicted or those resulting from suicide attempts. These types of injuries are often excluded because they are viewed as intentional, and most insurers have clauses that deny coverage in these circumstances. A, C, and D are incorrect because these are typically covered under a disability policy, assuming no exclusions apply. Question 16. Which of the following provisions in a disability insurance policy addresses the extent of the disability benefits paid? A. The elimination period. B. The benefit period. C. The waiver of premium. D. The cost of living adjustment COLA rider. Answer B. The benefit period. Explanation. The benefit period defines how long the disability insurance policy will pay benefits once the claim has been approved. This can range from a few months to several years, or even until retirement, depending on the terms of the policy, is incorrect because the elimination period is the waiting period before benefits begin. C is incorrect because the waiver of premium provision allows the insured to stop paying premiums if they become disabled. D is incorrect because the collar rider adjusts benefits for inflation but does not define how long benefits are paid. Question 17. If an individual purchases disability insurance that includes a cost of living adjustment collar rider, which of the following is most likely to occur? A. The benefit amount will increase in accordance with inflation over time. B. The premiums will decrease over time as the insured's income decreases. C. The insured will receive a lump sum payment for the duration of the disability. D. The policy will provide long-term benefits after the insured reaches retirement age. Answer A. The benefit amount will increase in accordance with inflation over time. Explanation. A cost of living adjustment COLA rider ensures that the disability benefits paid under the policy will increase over time, typically tied to inflation rates in order to maintain the purchasing power of the insured. This is particularly important for long-term disability policies. B is incorrect because premiums typically do not decrease based on the insured's income. C is incorrect because lump sum payment is not typical for disability policies that pay ongoing benefits. D is incorrect because COLA does not change the policy's terms regarding benefits after retirement. Question 18. In South Dakota, if an individual files a claim for disability benefits and it is denied by the insurer, what should the insured do next? A. Immediately cancel the policy and find new coverage. B. Contact a lawyer to file a lawsuit against the insurer. C. Appeal the decision by submitting additional evidence or a formal appeal to the insurer. D. Wait for the insurer to reconsider the claim at their discretion. Answer C. Appeal the decision by submitting additional evidence or a formal appeal to the insurer. Explanation. If a disability claim is denied, the first step should be to appeal the decision by providing any additional evidence or documentation that supports the claim. Most policies include an appeals process that allows the insured to challenge the denial. It is incorrect because the insured should first attempt to resolve the dispute through the appeal process rather than cancelling the policy. B is incorrect because legal action is typically a last resort after exhausting the appeal process. D is incorrect because the insured should proactively pursue an appeal, not wait for the insurer to reconsider. Question 19. Which of the following is an example of a residual disability? A. An individual who is unable to work at all due to a severe injury. B. An individual who can work but only at a reduced capacity due to a chronic illness. C. An individual who is temporarily unable to work due to a broken bone but recovers quickly. D. An individual who has a permanent disability and cannot return to work in any capacity. Answer B. An individual who can work but only at a reduced capacity due to a chronic illness. Explanation. Residual disability refers to a situation where the insured can still perform some of their job duties but at a reduced capacity, resulting in a reduced income. The policy provides partial benefits to cover this loss of income. A, C, and D are incorrect because these refer to more total disabilities that would result in higher benefits or full disability coverage. Question 20. Which of the following would most likely not be covered under a standard disability insurance policy? A. Disability caused by an accident. B. Disability caused by a medical condition that the insured had before purchasing the policy. C. Disability caused by a major illness such as cancer. D. Disability caused by an unforeseen injury at work. Answer B. Disability caused by a medical condition that the insured had before purchasing the policy. Explanation. Most disability insurance policies contain a pre-existing condition exclusion, meaning any disability resulting from a condition the insured had before purchasing the policy is typically not covered. A, C, and D are generally covered as long as they do not fall under exclusions for pre-existing conditions or other specific policy exclusions. Question 21. Which of the following is true regarding partial disability benefits in a disability insurance policy? A. They provide benefits equal to the full benefit amount for partial disabilities. B. They typically only apply if the insured is totally disabled. C. They provide benefits for a disability that results in a reduced capacity to work but not complete incapacity. D. They are usually paid indefinitely regardless of the duration of the disability. Answer: C. They provide benefits for a disability that results in a reduced capacity to work but not completing capacity. Explanation: partial disability benefits are typically paid when the insured can still perform some of their job duties but at a reduced capacity or earning potential. These benefits are generally less than the total disability benefits and are meant to compensate for the lost income due to the disability. Is incorrect because partial disability benefits are typically less than full disability benefits. B is incorrect because partial disability can be considered even when the insured is not totally disabled. D is incorrect because partial disability benefits are usually paid for a limited period. Question 22. Which of the following is considered a rehabilitation benefit in a disability insurance policy? A. A benefit that covers therapy or retraining to help the insured return to work. B. A benefit that provides full income replacement while the insured is recovering. C. A benefit that helps cover the cost of medical treatments related to the disability. D. A benefit that pays out a lump sum upon the insured's death. Answer: A. A benefit that covers therapy or retraining to help the insured return to work. Explanation: a rehabilitation benefit is designed to assist the insured in returning to work after a disability, often covering the costs of vocational training or therapy. This benefit helps the insured regain the ability to perform their job or find a new career if necessary. B is incorrect because this describes the income replacement aspect of disability benefits, not rehabilitation. C is incorrect because medical treatments are typically covered by health insurance, not rehabilitation benefits. D is incorrect because a lump sum payment upon death is usually related to life insurance, not disability coverage. Question 23. Which of the following is true about the lone occupation definition of disability? A. It covers only disabilities that prevent an individual from performing any job. B. It covers disabilities that prevent the insured from performing the duties of their specific occupation. C. It covers disabilities that occur while the insured is employed in another occupation. D. It provides benefits only if the insured cannot perform any work, even part-time. Answer: B. It covers disabilities that prevent the insured from performing the duties of their specific occupation. Explanation: the lone occupation definition of disability applies if the insured is unable to perform the duties of their specific occupation, regardless of whether they are able to perform other types of work. This definition is typically more favorable to the insured. It is incorrect because it describes any occupation definition which is more restrictive. C is incorrect because the lone occupation definition applies only to the specific occupation of the insured. D is incorrect because lone occupation does not require the insured to be unable to perform any work, just their specific job. Question 24. Which of the following best describes a residual disability rider in a disability insurance policy? A. It pays full benefits for a partial disability. B. It increases the total benefit amount after the insured is totally disabled. C. It provides benefits based on the percentage of income the insured is still able to earn. D. It pays benefits if the insured cannot perform any job. Answer: C. It provides benefits based on the percentage of income the insured is still able to earn. Explanation: a residual disability rider is an optional provision that provides partial benefits if the insured suffers a loss of income due to a disability but is still able to work in a reduced capacity. The benefit amount is typically based on the percentage of income the insured is still able to earn. It is incorrect because the rider does not pay full benefits for partial disabilities. B is incorrect because residual disability riders do not increase the total benefit amount. D is incorrect because residual disability riders apply to partial, not total disabilities. Question 25. What is the purpose of an elimination period in a disability insurance policy? A. It defines the maximum time the insurer will pay benefits. B. It sets the time before benefits are paid after a disability occurs. C. It determines the amount of benefits the insured will receive. D. It establishes the total duration of coverage under the policy. Answer: B. It sets the time before benefits are paid after a disability occurs. Explanation: the elimination period is the waiting period that occurs after the disability begins, but before the insurance company starts paying benefits. The insured must be disabled for the duration of the elimination period, which usually ranges from a few days to several months. It is incorrect because the maximum benefit period determines the length of time benefits are paid. C is incorrect because the elimination period does not affect the amount of benefits. D is incorrect because the elimination period does not define the total duration of coverage. Question 26. Which of the following is true regarding the taxability of disability insurance benefits? A. Disability benefits from a policy paid for by the employer are always tax-free. B. Disability benefits from a policy paid for by the employer are always taxable. C. Disability benefits are generally tax-free if the premiums are paid by the employee with after-tax dollars. D. Disability benefits are never taxable regardless of who pays the premiums. Answer: C. Disability benefits are generally tax-free if the premiums are paid by the employee with after-tax dollars. Explanation: disability benefits are typically tax-free if the employee pays the premiums with after-tax dollars, meaning the premiums are not deducted from their taxable income. However, if the employer pays the premiums, the benefits are often taxable to the employee, is incorrect because if the employer pays the premiums, the benefits are generally taxable. B is incorrect because disability benefits paid by the employee with after-tax dollars are generally not taxable. D is incorrect because the taxability of benefits depends on who pays the premiums and how they are paid. Question 27. Which of the following is typically considered a recurrent disability under a disability insurance policy? A disability that lasts for a few days and then resolves completely. B, a disability that results from an injury or illness that occurs again after the insured has recovered. C, a disability that begins immediately after the elimination period ends. D, a disability that causes the insured to be permanently unable to return to any type of work. Answer: B, a disability that results from an injury or illness that occurs again after the insured has recovered. Explanation: a recurrent disability refers to a situation where an insured's condition reoccurs after they have recovered and returned to work. If the recurrence happens within a specified period, e.g. 6 months, the policy may treat it as a continuation of the original disability rather than a new claim. Is incorrect because this would likely be considered a short-term disability, not a recurrent one. C is incorrect because the disability occurring immediately after the elimination period is not classified as recurrent. D is incorrect because this would typically be considered a permanent disability, not recurrent. Question 28. Which of the following is an example of a disability insurance policy exclusion? A. Disability caused by a non-work-related car accident. B. Disability caused by a pre-existing medical condition. C. Disability caused by a sudden illness, such as pneumonia. D. Disability caused by a slip-and-fall accident at work. Answer: B. Disability caused by a pre-existing medical condition. Explanation: disability insurance policies often have an exclusion for pre-existing conditions, meaning any disabilities that arise from conditions the insured had before purchasing the policy are not covered. A, C, and D are incorrect because these types of disabilities are generally covered by a disability insurance policy, assuming no exclusions for pre-existing conditions apply. Question 29. What is the main purpose of a disability income rider in a life insurance policy? A. To pay the insured's medical bills in case of disability. B. To provide additional income to the insured if they become disabled. C. To increase the death benefit paid to the insured's beneficiaries. D. To provide coverage for long-term care expenses. Answer: B. To provide additional income to the insured if they become disabled. Explanation: a disability income rider provides an additional income benefit to the policyholder in the event they become disabled and are unable to work. This rider helps replace lost income due to disability. Is incorrect because medical bills are typically covered by health insurance, not a disability income rider. C is incorrect because the disability income rider is focused on income replacement, not increasing the death benefit. D is incorrect because long-term care is generally covered by a separate rider, not the disability income rider. Question 30. Which of the following could cause the termination of a disability insurance policy? A. The insured becomes disabled. B. The insured reaches retirement age. C. The insured stops paying premiums and fails to reinstate the policy. D. The insurer adjusts the benefit period. Answer: C. The insured stops paying premiums and fails to reinstate the policy. Explanation: if the insured stops paying premiums and does not reinstate the policy within the allowed grace period, the policy may be terminated. Disability policies require ongoing premium payments to remain in force. Is incorrect because the policy would provide benefits if the insured becomes disabled, not terminate. B is incorrect because reaching retirement age typically does not cause termination unless specified in the policy. D is incorrect because an adjustment to the benefit period would not typically result in termination of the policy.